ASML stock is down roughly 16% after releasing their earnings earlier than expected. In my opinion, there might be an intern that might be getting fired right now. So today's episode, what I want to do is break it down into the following. First, take a closer look at what happened. Why did we get earnings and why did the market hate it? Next, I want to take a closer look at this kind of sentiment that's going on, that because ASML's earnings are bad, it's bad news for the rest of the chip market. And I want to say that's not necessarily true. So be careful who you hear out here in YouTube. The final thing is I just want to share my overall thoughts and why I believe there is a market now in the semiconductor space that might be giving us some buying opportunities. And if you don't want my intern to get fired, you got to make sure to hit that thumbs up, subscribe button, and check out the pinned comment for a lot of special offers. All jokes aside, I don't have an intern, so let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so we can see ASML right now sitting at $730. The stock dropped roughly 16% in one day. That is insane. Year to date, the stock is only up roughly 1.8%. And this is a stock in the semiconductor space that is very, very important. Now, normally, I don't really care much about the semiconductor equipment space outside from the big players like ASML, but recent drops right now, in my opinion, as we're going to discuss in a bit, is creating nice buying opportunities for long-term investors. Now, these levels are actually cheaper than what we saw in August, and I thought August was already a nice buying opportunity. But again, the market always likes to humble us, or like I mentioned in the last video, humiliate us at time. And I think this is a big humiliation for a lot of investors. Now, we can see from their press release that due to a technical error, information relating to their Q3 2024 results were published earlier today on part of their website, ASML.com. Now, for full transparency, they actually brought up the full results, so like that, no one was left guessing. In my opinion, what probably happened is they put the wrong hour for the results to be released, as they were expected to be released tomorrow. So probably the wrong time and the wrong dates. Now, like I mentioned, hopefully some intern does not get fired for that. But it's crazy, right? How even a multi-billion-dollar company can make a simple mistake like this that can really cause stock prices to drop. The other thing is ASML didn't really have their typical earnings call because their earnings are tomorrow. So it leaves with a lot of questions for this company. And I do believe those questions are creating a lot of uncertainties as well, as usually analysts would be asking, hey, what's going on? What's wrong? What does the future look like? Can you give us a little better can you paint a better picture for us? And unfortunately, we couldn't have done that today. So that uncertainty, in my opinion, is bringing more volatility. Who knows? Maybe with earnings call tomorrow, we will get a lot more insight on it. Now, in forms of results, the results for May were not that great, right? Quarterly net bookings for this quarter was roughly 2.6 billion euros. Now, this was actually expected to be over $5 billion euros. So this was a huge loss. And this right now showcases that there's not as much demand as previously anticipated by analysts for ASML's equipment solutions. The other thing is the company did kind of bring down their expected sales for 2025 to be between 30 and 35 billion euros. And they also gave gross margins between 51 and 53%, which they mentioned are lower than they previously gave us at an investor day in 2022. Now, the main reason is while there continues to be strong development and upside potential in AI, so we continue to see high demand in AI, other market segments are taking longer to recover. And in a bit, I'm going to explain why that is very important to notice. It now appears that the recovery is more gradual than previously expected. This is expected to continue in 2025, which is leading customers to continue to be cautious in their orders. And also the competitive foundry dynamics have resulted in a lower ramp of new nodes at certain customers. We've heard results that Intel, for example, is slowing down some manufacturing in certain parts of the world. Like in Europe, they're slowing down some of the fabs there by about 2 years. So obviously they're going to push out some of that equipment that they needed there, which is obviously causing some pain for ASML. And they mentioned leading to several fab pushouts and resulting changes in lithography demand timing. Now, in memory, they see limited capacity additions with the focus still on technology transitioning, supporting the HBM and DDR5 AI related demand. So we can see that unfortunately right now, the demand for their equipment is not as strong as previously anticipated. Now, another big thing here is that their Chinese market, which used to be, originally it was around 20% of total revenue or something along those lines. In the past few quarters, it has actually risen to almost 50% of sales, and it seems like that is coming back down. So ASML is kind of losing that weaker China sales, which is also causing the demand to kind of go down. Now that we understand what happened, I kind of want to talk a little bit of what this means for the overall chip space. So in the semiconductor manufacturing, there is two main processes. First, there's the front-end manufacturing, and this is creating the circuits on silicon wafers, aka using things like etching and doping. And this is where ASML's equipment, like their EUV lithography, is primarily focused on. Then there's the backend manufacturing, and this includes things like packaging and connecting finished silicon wafers via dicing, via bonding, and other solutions. ASML's primary equipment is not used in this space. And the back-end manufacturing is where we're seeing the AI chip bottleneck. If you heard from Nvidia, right, they're unable to keep up supply, right? The demand is too insane. And the main reason is because the bottleneck is here on the back-end manufacturing. It's not that they need more tools. It's not that the manufacturing companies need more tools for front-end manufacturing. They need it for back-end manufacturing, and that's where they're increasing capacity. So I think it's very important to know the difference here of where the bottleneck is for the AI chip market. So even if ASML is seeing a slowdown here, or the demand is not strong enough here, it has nothing to do with the AI chip space. All right, so now I also want to talk a little bit about why ASML's report doesn't necessarily impact AI chip demand too much. And I'm just going to jump around here, but the more important thing is manufacturers pretty much already have capacity for current demand in many segments. I mean, to be honest, AI chips don't require the same volume as consumer electronics. And when I'm thinking about consumer electronics, I'm talking about phones and PCs, right? And right now, as you guys know, the phone and PC market are much lower than when we had during that kind of COVID peak when everybody was staying at home. So ASML's demand doesn't necessarily correlate at all with AI chip demand. So if this is scaring you from your AI chip players, especially those that deal with the data center market, then this is not something I necessarily would be worried about. Now, if you're looking at as AI chips for components like computers, like phones, then maybe this might give you a little bit of a thought process that, hey, look, the AI PC space, the AI phone space is still taking some time to develop. All right, so now that we understand what happened and why it doesn't correlate to the AI chip market, I want to explain a market that I believe is looking pretty attractive right now. So obviously with ASML being down, it kind of brings down that the semiconductor equipment is going to be down as well, right? Because if they're not spending capacity on ASML, in theory, the market sees it that they're not going to be spending on companies like Applied Materials and other semiconductor equipment plays. So Applied Materials was down roughly 10% today. In my opinion, right now is actually the time to take a closer look at the semiconductor equipment space. I personally enjoy the smaller cap ones. The popular small semiconductor equipment company is Kulicke and Soffa Industries, ticker KLIC. I've actually done plenty of videos of other semiconductor equipment companies that I enjoy. Normally, they're the ones that are either below $10 billion or those that are very, very focused in the memory space, as I do believe that industry is going to see a nice boom. So for me personally, I believe the semiconductor equipment space is a great time for me to enter for long-term mentality. This is not going to be an Nvidia where I'm going to see crazy returns in a few months, but I think in the long term of things, I would be happy to add at these levels. So I want to hear your thoughts. Do you believe this is a space you want to enter right now, or do you think it's a dead space for now?